They're confusing, they can be aggravating, and the majority of us pay a private company as a solution, and collectively we spend billions of dollars every year doing this. Benjamin Franklin even stated that in this world, nothing can be said to be certain except death and taxes. I'm Brent Kuykendall, president of GulfCoast Financial Services, and let me welcome you to this special tax edition of Coffee Talk. If you find this content to be helpful, please be sure to like this video and subscribe and follow us. And with 2024 well underway, we are fast approaching that date in April when our taxes must be postmarked and on their way to the Internal Revenue Service. And whether you end up receiving a refund or you owe money, most U.S. citizens and most people who work in the United States will need to pay taxes on the income that they earn above a set minimum amount. So whether you've already filed or you are that person who likes to wait till the 11th hour, we're going to look at 6 key tax moves to consider that are designed to help you keep more of your money and put your savings in a position to grow. So let's get right to it. I believe that it's imperative that we become knowledgeable regarding tax changes. We need to always be willing to learn and stay up to date on changes that are happening, especially if it has the potential to benefit us, either now or in the future. And this year, some of those changes, believe it or not, brought good news for taxpayers. Did you know the IRS widened tax brackets, meaning potentially lower income taxes for many while increasing the standard deduction and many savings incentives? These inflation adjustments mean that people may have more taxable income before being bumped into a higher tax bracket. You can see the difference from 2023 to 2024 on this chart, and if you're not familiar with how our taxes work, we actually have a progressive tax system. So no matter what tax bracket you fall into, the very first dollar is always going to be taxed at that lowest tax bracket, or 10%. Then only the portion of my income that falls in the next bracket is taxed at 12%, and so on. So if you make $100,000 and file married filing jointly, that whole amount is not taxed at 22%. But some of it's taxed at 10% and then 12%, and then the remainder is taxed at 22%. Additionally, the standard deduction for 2024 is now $29,200 for married couples. That's an increase of $1,500. For single filers, it increased by $750 to $14,600. Second, make the most of higher savings incentives. Limits on savings plans like HSAs, health savings plans, 529 college savings accounts, and IRAs, individual retirement accounts, actually increased this year. You can contribute $7,000 to an IRA in 2024. That's up $500 from $6,500 in 2023. And if you are over 50, you are entitled to a catch-up provision of an additional $1,000 per individual. Also, if you have not contributed to your IRA for 2023, you may have until this year's tax deadline to do so. And why not consider a Roth conversion? A Roth conversion involves transferring money in a traditional IRA to a Roth IRA, and then paying the taxes on the converted amount. After that, the money grows and can be withdrawn tax-free if criteria is met. Also, it's not subject to the required minimum distribution once you reach that magical age in your 70s. Now, it may be the time to consider a Roth conversion. Tax rates potentially are set to increase in 2026, and you could end up paying higher rates if you wait to convert your traditional IRA until then. I would definitely recommend consulting with your financial advisor to see the impact this might have on your overall tax burden in the year that you want to convert, and if you're already receiving Medicare, how this might affect your IRMAA brackets. Fourth, for non-retirement accounts, you might also want to consider tax loss harvesting. Most investors use this strategy at the end of the year when they assess the annual performance of their portfolios and its impact on their taxes. An investment that shows a loss in value can be sold to claim a credit against the profits that were realized in other assets. It's a tool for reducing the overall taxes. We need to understand, however, that selling an asset disrupts a portfolio, and you should avoid buying the same asset that you just sold at a loss, which may violate the IRS's wash rule. Number 5, revisit your estate plan. Time is running out on the 2017 Tax Cuts and Jobs Act, with estate planning provisions scheduled to sunset at the end of 2025. That means the estate and gift tax exclusion, which was doubled, could revert back to its pre-2017 level. You might want to consider accelerating gifting or donating appreciated assets. You can gift up to $18,000 per donor to as many individuals as you'd like in 2024. And if you're married, each person in the couple can gift this amount without the gift being considered taxable. Finally, number 6, get financial checkups. Doing checkups periodically throughout the year can help you pay the right amount of taxes as you go. You can also go to irs.gov and search for their paycheck checkup, which will analyze and revisit your income tax withholding. It's a great way to see if you're withholding the right amount of tax from your paycheck. You can also potentially reduce your tax burden if you take the time for some thorough bookkeeping to make sure that you're claiming all the deductions and getting all the credits that you can. One potential area for adjustment, given that remote work is still an option for many workers, is to take a close look at your residence. If you are still working remotely in a lower tax state from where you usually work, you may want to take a deeper look at your residency options to make a long-term decision about the best choice for your situation. Tax planning is not a one-and-done exercise. We need to utilize these and other planning strategies throughout the year to help reduce our taxes. Aligning with a financial professional is a bonus in trying to understand and implement ideas and strategies regarding your specific finances. And if we can help you in any way in these areas, please feel free to reach out to us at GulfCoast Financial Services. You'll see our information listed on the screen. I hope that you found something in this video to be beneficial to you today. And if you've learned something useful, please again subscribe, give us a like, and follow us, and we'll keep producing helpful content just like this. We'll see you next time.